Hey traders, what's going on? Jamie Saettele here. It is March 23rd, 2016, and we'll start right off the bat with the US dollar. Just real quickly, before I get underway, make sure you guys can hear me and see the charts and everything, and then we'll, really get underway. So just let me know, uh, with a yes or whatever that you guys can hear and see. Can you guys can you hear me? Hello, anybody? Anybody? Can anybody hear me? Can anybody see the screen? Please let me know. Yes. Okay, there is an answer. All righty, good. All right, so I'll get started. So we'll start with the buck. So last week we were looking for a rebound, not quite a rebound of this magnitude. I still think the move is lower for the dollar. It came into the year kind of with the big plan of being, the late March top and dollar tumble, right? That was the deal. So we seem to be lining up for just that, I guess. At this point, again, here's the analog, the euro analog, right? So under this, we basically get this rally. We're looking for it to basically bottom out this week, but the events of the last couple of weeks with ECB and Fed kind of screwed all that up, and the rally, from my vantage point, got started a little early. So yeah, that's what we're looking at, okay? And there's no change there. And just as a reminder, this is the same thing, but for DXY dollar index. In fact, this actually would have been the week of the top under the analog, okay? Let's see, the day of the top, we would have been looking at basically last week on the 18th, or in a couple days, like the 29th. Either way, I still think the big move is down for the dollar before it's up again. So the tradable move being down for the dollar before it's up again. That's what I'm going with. That's what I'm working on. That's what I'm, that's my continues to be the way to approach this, in my opinion. So that said, we've had a hell of a rebound. This was FOMC 316. Most of the decline from that point, a good amount of it has been retraced. Obviously, we're back into simply, excuse me, we're back into horizontal levels. 12,000 is the February low right here, and then the December low is 12,040. Okay, so those are the two spots, or that zone, I guess, would be the where you look at on the downside from here. I thought we would have topped at 11,970, as I had written in the past few notes, but the market's going to make it extraordinarily difficult, obviously. So, to review, you do have a topping process here that completed, and this rally is testing now the breakdown levels of that of that topping process, the breakdown. So this was ECB, this was Fed, and the rally has brought us basically right back into where we were trading on those days. Obviously, some currencies, much different than others as far as the topping is concerned. As far as the index is concerned, pound, for example, is going to be a lot of this strength because pound's just gotten just absolutely murdered, right? Euro is not going to be Euro and Swiss are not nearly as much, especially Swiss. In fact, if I show you, here's, just if I show you these are the futures hourly charts. This is Euro down here, pound, okay, Swiss franc, Japanese yen, Canadian dollar, New Zealand dollar, and Australian dollar. You can see the red line on this chart. So actually, Aussie just came into where it was the high volume level from FOMC just now. So it's done a round trip. Kiwi, same thing, round trip. CAD, a little more than a round trip. Okay. We broke below this, and this, by the way, is Canadian dollars. So dollar CAD would be the opposite of this. Dollar CAD would be going up, right? Canadian dollars going down. And so we've already broken that level, which is good for us because we're long dollar CAD. Same thing as short Canadian dollars. And that level, actually be looking at it for resistance at this point now that you've broken it. Japanese yen, this was actually FOMC here. Okay. And then when we had this thing, we had the charts over the last, I think a couple nights ago, I put up the chart about, what was it about, obviously the long-term charts and stuff with a huge level of 1066, but this level here being, kind of suspicious, the huge move seemed very intervention-like on the part of the Japanese. Of course, they're going to deny it, but certainly seemed like it. And that level basically is, to me, kind of like the make or break spot. So interestingly, we've actually come all the way back. This was FOMC, and this is, I'm going to call it the intervention level right here. So that gives you two trading levels for dollar yen. This would be, again, you'd be looking for a bounce in yen here, which would mean you'd be looking for a dip in dollar yen. But this could be resistance now, okay? Which again, support for dollar yen. Swiss franc gets there in a second. British, so here's euro. So euro, this was FOMC, okay? We've actually, as you can see, we held it yesterday, actually during Europe. And we just this morning have come back down through it. I still like euro on the upside, generally speaking. Looking at 115 as next resistance, and downside risk is like 100 and so pips. So you're talking about 300 plus on the upside, 100 on the downside. I like that trade. British pounds, as mentioned, this was cable, FOMC level. Cable is obviously broken its FOMC level significantly. And by the way, this is interesting. This is the NFP level too. So the NFP level and the FOMC level are basically the exact same level. So it's just a big price spot for whatever reason, but it is. And we'll look at cable and all the charts here in a second. I just want to kind of give you a perspective on what the markets have done post FOMC. And then finally, Swiss franc, as mentioned, Swiss franc's the only one of the currencies, the major currencies, that has yet to take out or completely retrace its post-FOMC move, right? So FOMC's here, Swiss franc closes here, continuation on the upside, and then since then, everything's come back. The only market that has yet to retrace everything post-FOMC is Swiss francs. So that's somewhat interesting to me, I guess, given the fact that you do have, Swissy kind of acting, fairly firm, I guess, the fact that it can't, come all the way back down. But either way, I don't see a trade on Swissy at this point. But all right, so let's get into the charts then. There's our kind of quick look at some of the futures charts and the volume and what was going on post FOMC and since that point. Okay, so the US dollar, right? Okay, US dollar, similar as before. 12.040, I guess, would be resistance to look at this point. I don't want to get too much into this chart because I really don't have a whole lot to add at this point. I mean, 12.040, fine. You can notice too, by the way, that when give out these levels like this, right? And I say, like, we have this idea that the dollar is going to tank, whatever, heading into, March, end of March, early April. The dollar is really going to start to take it on the chin. It's going to be a big dollar dumping or whatever. Notice that did not deter from taking dollar long positions, right? Despite that so-called bias, still wanted to get on the short side on CAD and the long side on dollar. So we wanted to be long dollar CAD, right? And so you might be thinking, well, why, if you're reading the analysis over the last week or whatever, why would you want to do that? Because the setup was there. That's like really the only reason that matters. Price is there. Price is reacting at the levels that it should be reacting at, right? So irrespective of what you think the dollar is going to do, it does. If you are truly following your trade setups, you're going to end up taking setups that are so-called against your bias. In this case, long dollar CAD's one of them, and glad we did because that's so far working out okay. Anyway. There's the December low at 12.040. I don't know if we continue to go higher, you could get up there by tomorrow. There's this parallel here. And if we were to react there and sell off hard, I think it'd be a good sign for, for the downside as far as the dollar is concerned, generally speaking, right? And that would be more euro centric, obviously yen centric, pound centric, and Aussie centric. That's the four currencies that make up this index. So I'll leave that with the dollar, or would leave that on US dollar at this point. Let's look at the ICE dollar index. Again, this is the one that's close to 60% euro, so good amount of euro exposure here. Second biggest one is yen. Third biggest one, pound. So this was a high volume day here, okay, from ECB, and you can see we've come back into that level. This is the level I'd be kind of expecting to hold in the US in this index if we were going lower in this index, which is telling because, again, this is more heavily weighted towards euros. You can see what else we've got, up at this region. We're currently 96.17 is actually where this is trading, and that's the March 26 low from last year. So in effect, we've done a complete round trip with where we were last year and on almost this exact date. So do have former lows down there in that region for potential, resistance now. If this continues to go higher, then I guess you'd be looking at 96.69. But I'm kind of looking lower at this point. If we make it much beyond here, I think it's kind of much more cloudy and could go higher. Euro, well, we've had the triangle thing on the radar for a little bit. Once we broke up through this region, I'm kind of surprised that we've actually come back into below the so-called golden line, if you remember what that is. But irrespective, again, the next resistance we're looking at is up here around 115, and that is the October high, okay, from 114.94 to be specific on that. And you do have the longer term slope at that region too. So if I scroll back, this is simply a trend line from the high in 2009, the 160 high from 2011, make a channel, and then it's simply the median line from that, okay? And why would we follow that at this point? Well, the main reason is that it's already proved itself, right? The first clue that it was important was the fact that it actually ended up being the gap from January 1st, not January 1st, but the first trading day of January around 2015. And the next big tell on this thing was that you should follow it, is that it ended up being resistance literally to the tick on the 24th of August, right? That was the day that everything kind of crashed and the euro and gold went through the roof. So we'll be watching closely if we get up to that region. I would expect the market to get up there and sell off again. And let's bring in the analog quickly again, that I'm sure you are all very sick of at this point. But so if we bring up this analog, okay, so it says basically we'd be looking for lows on this thing if this were to play out, be looking for low basically today, and maybe sideways up until about April 4th. Okay, you can see down here, that's what we're looking at, and that this thing really gets underway throughout April. Okay, what's interesting about this as well is that even the analog, the way that the market traded back here in 1998, this is what this would be, 1998. If we were to get up there, even the analog suggests that you would actually see a decent amount of trading around this level. In other words, you could get up to 115 and trade all the way back into below 113s, right? Leon with a good question. Higher euro correlates to big drop in stock market. Yeah, I'm going to take a look at the stocks here in a second. We'll get into that. So that's why, by the way, why I have the target on 115, because I think even if we do get up into 115 over the next, say, week or so, maybe longer, but if we get up into 115, then I'd be looking for the market to actually trade 115 and then maybe pull back, right? Maybe you end up pulling back into this line right here, okay, which has been, obviously was resistance back here and resistance right here, precise resistance. So, that's just something to think about moving forward. You could trade up to 115, trade back into 113.80 or something, okay? So thinking ahead, but it's a habit. So there's euro. Let's go from euro to dollar yen. It makes sense to go kind of do those two together. And then we'll look at some stock markets because it makes sense to do those together as well. So here's where the thing with the dollar yen. This is a really big level. Okay, if you can't tell by the writing over the weekend, I'll tell you right now, this is a really big level. Okay, this is a 2008 high, 110.65. Last week's low was 110.66. Literally to the tick, it ended up as support. Okay, if we go to the short-term chart, you can see that we've traded up into the month open. That's what 112.72 is. Okay, so dollar yen is actually at this point making a doji for the month, as you can see right here. Okay, so if we're thinking higher euro, from these levels, albeit allowing for a little more, chip chop, then how does that make sense with a higher dollar yen? Well, the dollar yen, let's just go back in time here. Dollar yen can spend a great deal of time going sideways between, say, 111.50 and 114. Okay. In fact, we've seen tight ranges in dollar yen on numerous occasions. Most recently, the really big one was back in 2014, but we had it last year as well. Okay, really from August throughout October, and we had it the year before, or sorry, the same year, but that was also from March, okay, into May. So really the same period, same time of the year. So don't assume that just because the euro, appears to be headed higher, right? At least the risk to reward is on the upside as far as euro is concerned. To 115, again, need to hold above the big, I think 110.50s region. But as long as we're looking towards that level, don't assume that that means dollar yen has to collapse again. Dollar yen may very well hold up and trade in a range. And on dollar yen, I'll go short term on this. Okay, go 60-minute chart here. So it talked about, see this candle here being kind of the Ministry of Finance, Bank of Japan action that went down. And that level is 111.68, okay? You do have the week open at 111.50, actually ended up being support yesterday morning during Europe, during the tragedy in Brussels. So check this. This looks like the right thing to follow at this point. I mean, look at the touches that you have right here. And we just got up into it, okay? And when you draw just a very simple trend line, right? Two lows here, it's parallel to this. So that tells me that I'm looking for support in dollar yen if we get down in this region, down in this level at some point, right? And that's all. You've got the median line, longer term median line, go with 240 here. You've got this median line, which was support here, okay, and basically resistance throughout this period. Remember, we broke up here. I thought we were going higher at that point. Obviously, we didn't, even though we had what I think was the right analysis because we had gold reversing with the weekly J spike, which, gold's actually come off a decent amount. But dollar yen is doing its own thing here. So anyway, you do have some tradable levels within this range, in my opinion. Looks to be 1320s or so, and say about 1170. And, if you just kind of look at across the chart where this red line is, which is a high volume level, but you can see quite clearly, right, you've got good amount of stuff going on, around above and around 113, right? Move off the low, spike high up there, 113.15, low back here on the 17th, 113.36, high up here on the 22nd, 13.38, right? I mean, you get the point here. Then support here in the mid 13s. So, just above 113, maybe 113 and a quarter, 113.25 looks to be like, a place for resistance on the near term, followed by support down here at the 1150 to 1170 region, with emphasis really on the 1170 region because again that's the level that we made the low and we've held it, and that was the big huge high volume level in Japanese yen, which was probably intervention. Doesn't matter what they say, it probably was. So those are your spots, I think, there for dollar yen. Okay, so with that, we can go to the S&Ps, okay? And I'll bring this up here. So S&P 500. Okay. Nope, it's not even the right workspace. Okay, so S&Ps are grinding into this peak, so to speak, right? And if I just pull up an S&P chart, just real simple, the area for the top is going to be up here, okay? It's going to be high 2060s to low 2070s, okay? In the near term, we can sell off a little bit more, okay? That's what I'm talking about with this chart, okay? So, the 2060s, 2070s, I have that up here. You can see too many circles. Okay, but how it gets there, it's like a map. Like there's a lot of different ways to get there. It doesn't just have to go straight there tomorrow. A thing that I'm often reminded of and always tell myself, and is that the market has its own schedule. I was telling, kind of talking about this morning with Mike, but the market has its own schedule. It's on its own time, right? We all have this idea that like, these grand plans, like, what the market's going to do. I say the euro is going to go up to 115 or something, right? Maybe, and I think it does, but does it go to 115 while it stays above 110.50? Well, I hope so, but the market has its own schedule, its own plans, and it's very difficult to get in tune with it. When you do, it's a beautiful thing. But that's why risk management is so important, because you don't know what's always going to happen when it's going to happen. Okay. So you have two options, good risk management or, go extinct. And good risk management involves several things. One, position sizing, like to go in small first, and then, if you lose, you lose, and it doesn't matter. But here's where I'm going with the S&P. Tweeted out this morning, I think we get like 2035, 2036 support. We have come off. We're currently 2043, so you could get down 8 points or so here today. And if we were to rally off this support, I would be like, okay, now we can go to the highs. But you know what? I'm not saying that it's going to rally off the support. I'm just saying it is a support. If it cracks through here, the next level is actually right here, which is like 2022, and that's actually the FOMC level in the S&Ps. Okay, so you could see a scenario in which we actually trade down like this and end up trading down to 2020s and then get up into the big resistance at 2070s. Okay, so at this point you're kind of in the middle, and the middle being like the middle of the big areas, the big levels to go, right? So I think 2035, 36 is support, but that doesn't mean I trade it, right? Think about when you're in the middle of the maze, there's so many different ways that you can go, right? That's when you have the most options. When you get to the end, that's when you have the least amount of options. There's really only one way that you can go. That's the way I'm looking at this market right now, is that once we get up into this resistance, I'm saying that I think there's one way we can go from there, and it's lower. All right. But how we get there, I don't know. It could go here down to 20, 35, 36 and go higher, or it could come off harder and go higher. Right. That's why it's also dangerous to make assumptions about, related markets. Like, let's say that euro rallies from this level. Okay. Let's say that euro picks up and trades up. Let's go here. Let's go to euro chart again real quick. Let's say that euro, here's 240-minute chart, right? Let's say that euro rallies up to 112.60, okay, which is the weekly open price, and it would just be a natural spot for it to stall out or something, okay? Okay, let's say maybe that's actually interesting because that's pretty close to 50% retracement anyway, but so let's say we get up to 112.60, okay? At that point, it's not, we would go break even on euro because we'd want to minimize our risk, okay? Or at least put it below this low if we hold this low, all right? Just putting out scenarios here. Let's say we get up to that level and the S&P at the same time is trading down here, and then it starts to turn up. At that point, be like, get the hell out of the euro, because if we go higher, 2070, then euro is going to go a little lower. We get a better entry anyway, right? So it's constantly adjusting your observation of what you see, what's going on in the market. Okay. As it is right now, I'm fine with its position on the long side. I don't mind. Okay. But I hope that makes sense. Okay. Let's look at the DAX, because obviously the DAX, when it comes to the euro, the DAX is going to be quite important. So wrote over the weekend basically how the DAX has been seemingly at resistance. It seems like it's been at resistance for like the entire month. Basically it has. Let's see here. Okay, so why is this chart so screwed up? Anyway. All right, what we're looking at here, so we got the DAX chart. This is the CFD, the German 100 it's called. And you can see basically we traded up on the DAX. This is 310, okay? That was ECB day. We traded up to that level, and we've pretty much been at that level for since then. So for 2 weeks, for most of March, right? And again, what happens when the DAX comes off hard? The euro rips face. Okay, so you are seeing quite a divergence here, okay, between euro and DAX. Again, the euro's like, if the DAX was doing what the euro is doing, the DAX would be down here, okay? It's not. It's up here. It's going to come back down here, again, on its own schedule, its own time, okay? So, just to review, I mean, this is a resistance or a support, okay, that went back many years, goes back many years. And you can see here, it was low back in October 2014. It was low, back in August. Okay, it was consolidation and ultimately the low in October. We broke it early in the year and consolidated around it again, broke down, and now we're at it again. So this is all resistance. So when I look at this chart, I'm like, yeah, I dig euro longs at this point, because this thing is just petering out. People are going to give up on this thing at some point on trying to short it, and I probably would too. I'd rather be long euro rather than short DAX though, right? And essentially you're going to get paid if you're right on the short DAX. Okay. So that's how I'm looking at the DAX. And again, maybe the DAX sells off a little bit, and then maybe it goes into a new high like the S&P does, or maybe it doesn't, and there's a divergence or whatever. But you see what I'm saying? We have all the right levels here as far as the right ideas, and being, having a kind of a bearish position into resistance on DAX, which is bullish euro. Okay, and plus you got the euro momentum doing its own thing anyway. All right. So there's DAX. Let's move on to some different currencies now. We've done euro, we've done yen, some dollar, we've done the dollar, the indices. Let's go pound. Okay, so British pound. Go daily. I think that will be, you have to be kind of stupid sometimes, right? I think that I think that the pound's going to 150. All right. I really do. I think pound's going to 150. I think it could happen in, quicker than a lot of people think. That said, if it's going to go to 150, you better hold 140 support, because if it doesn't, then this thing is just it's screwed, really is screwed. So here's 140. It's the lower parallel down here. Been tracking, by the way, as you know, we've been looking at pound yen a decent amount. Leon says, why 150? It's just, you have good resistance up there, Leon. So if I let's put on the moving averages, see the 200-day? It's up around 150. This is a trend line that basically is the dominant trend for the long-term trend at this point. And that's up around 150 as well. Okay, and so up here, Leon, the trend, this is like all this stuff, this is like basically April. Okay, this whole thing is April. that's all around 150. Okay, 149.90 at the end of the month. So that's why I'm saying if it goes higher for a big squeeze, which I think it could, then 150 is your ideal spot that it could go. Okay, and that's where I'm looking. And then up here is where I think you would want to actually turn to the short side. Okay. And if you remember, one of the main reasons why I'm looking higher from this point, this is a weekly chart, okay, of the pound. This is the slope from 1992 to 2007. Extending it off of the financial crisis lows, we basically cut through that level and then had a huge weekly reversal. So if there's going to be a low and a move back to 150, that's why I think it's from here, right? It's because of the action that happened down here. Okay, and it's also, you can see the trend line that extends off of 2011 lows as well as 2013 lows. That was also support. Okay, and oh, by the way, that same slope off these lows from 2010 and 2015 comes in a little higher, up at 146.90. It was also resistance in February. Okay, so that 147 to 150 region, if you will, is your big long-term resistance to get bearish on pound, but that's in 900 pips. So you might as well try to play it on the long side until that point, in my opinion. Okay, everyone's going to do what they like. This is what I like. So I hope that makes sense. Yeah, Leon saying agree, playing through euro yen short or euro pound short. Yeah, the thing is with that is that euro, if it looks okay at this point, right? I had the grand idea to do it through pound Swiss long. Looked like we had a good start, and then obviously the pound fell apart again. Anyway, on pound, this 140 level is just huge. It's kind of that thing. If we get down there, it's got to hold. Okay, and then you'd be looking higher. Also on a seasonal aspects here, like here's the pound dollar seasonality. Okay, January, February, March, April. April is historically the best month of the year for pound by far. So that to me is great because we're going into April, we're a week away from April, but as we get into April, what's everyone talking about with pound? They are scared, they're shitting their pants about Brexit, right? And that's great because, and I'm not saying it can't happen. Maybe the pound goes to 120, okay? But I'm saying from the way I look at things, when you're coming into a positive seasonal period like this with April, April's coming up, and that's historically the best month of the year. And by the way, May is historically the worst month of the year. That's true for the euro as well. It's true for the dollar. Dollars historically, May is usually huge for the dollar. Anyway, that's why we're looking for this washout, obviously coming in to April. But I'm rambling. But with pound coming into April with really bearish sentiment at this really long-term support, and even a good-looking short-term parallel with support at 140, that's a dream kind of setup. Doesn't mean it has to work, but man, it's tough to see it, not working. That's the kind of setup, super negative sentiment, everyone freaking out, Brexit. It doesn't take a lot for the boat to shift and for the market to rally and squeeze everyone out that's short for the collapse of the British pound. Okay, and then it can go lower after that, after everyone's wiped out. So that's my thinking on the pound. Okay, and the seasonality part does have a good part to do with it. Okay. All right, let's move on to Aussie. Aussie dollar. I think we actually just came into support. So I think I put it pretty clear last night. I basically am down for buying, weakness in Aussie up until about 77.85 or so, which is, the next big resistance on the golden lines for the Australian dollar. I mean, this thing is beautiful. It crosses, basically some of the biggest trading points of the last 3 years for the Australian dollar. And again, it's about 77.80. So it's we're currently 75.30. So you're 250 points away. Again, I think we get there. The idea is, the question is, how do you get in the position? Well, we basically just came into support like right now, or are coming into it. This isn't the chart that I had all marked up nice, is it? No. Let's see. There it is. Okay, so this is the chart that I've been kind of putting on the swing updates lately, and put out on Twitter this morning. And as you can see, it's here's the parallel. Okay, goes back to these lows here in September, highs up here. I mean, it's real simple stuff. But this parallel that extends off the high back here, big inflection point, December 31st, was then good support here, a resistance here on the 7th. We've actually come into that, and you get two equal legs at 75.18, right? Yesterday in the post it was 75.15, but that's when I thought the high was right here, right? We made a slightly higher high in Asia last night. Had a little 4-hour reversal, came off hard today. So your support is awfully close. And an even better level to watch is this one, which again, it intersects here, right? So, but you've got the same thing going on here with the support from the shorter term slope, and all that is this one. Okay. Here, why don't we just do this? Why don't we take it all off from draw so you can see it happen? Okay. All right, so there's your trend line. We were long, by the way, here. We bought this right here, and we got stopped out here. There you go. That's it. Okay, so you basically want to buy this right here. And then you want to target, and by the way, this is just simply, you're calling this former resistance becoming support. Support should be support again because you're in an uptrend. And do you know why you expect this to hold? Here's the main reason. Because you've pushed through the top of this resistance, okay? It could be that the next top occurs, on one of these resistance lines, right? Maybe it occurs up here somewhere. Okay, we're looking at 77.80 anyway. But this is a really good slope to work with. This is the cleanest I've seen Aussie in a very long time from a trading perspective, okay? And then you've got the bigger slope, right? And you get that right here. This is the one that we're looking at here, right? So real clean with Aussie dollar. Okay, so that's Aussie, which looks good. Quick shout out on pound yen. Again, this morning talked about, on Twitter at least, said final dumping coming here in C wave. Looks like that's underway, so heads up, we could be getting a low in pound yen coming up. Again, I think it could be around 158. We'll see. Let's move on quickly to Kiwi, even though I'd rather shove bamboo shoots up my fingernails than look at Kiwi dollar right now, because I frankly am not too certain on what's going on with Kiwi. I will say, if I had to give you a price to watch in Kiwi, I would say 65.88. It's the month open. Trend line, slope, a few things there. Maybe we get down to 65.88 for Kiwi. You can still look at everything that's gone on from last August in two ways. You can look at it as kind of a triple top head and shoulders, if you will. Okay. And it is a head and shoulders possible because it's on a closing basis. You still have the peak as highest in the middle. Okay. Or you can look at it as an ascending triangle. And that would be quite bullish. And some might say, well, how can you have two interpretations? Well, how can you not? Okay, not until one of the interpretations is proven that it's more likely than the other would you even, necessarily trade on it. Okay, until that point, if you are hell bent on trading Kiwi, it's a range, and 65.88 looks like support. You could get resistance at 67.85, which is at this point the high day close or daily reversal resistance, and the week open, of course, 67.80. Okay, but between here and there is nothing to do. I probably wouldn't really want to sell up here just because you do have, again, the possibility of a broader breakout to the upside, and we're looking for kind of dollar to roll over anyway. But just based on this chart alone, those are the levels I give. Okay, let's go to dollar CAD. Okay, so dollar CAD, you know this chart from the weekly. It's not out of the question, especially when you consider, and Gary, I see your question. I will check out dollar Mexican peso here in a moment. But with dollar CAD, by the way, guys, it's not out of the question that there's actually a pretty big low in place. Like, we'll look at the short-term chart here in a second, but bear with me on this. Here's a daily wave count. Okay. And let me show you something here. We're going to go from, let me get rid of all the trend lines on here, and I want to show you. Okay. So count with me here, right? Wave one, wave two, and this is going back to 2011. Wave two, okay, 1, 2, extend, wave three, the really sharp extended 3, 4, and then wave five, and wave five is extended 1, 2, 3, 4, 5, okay, with kind of a blow off type of move. Now, in Elliott channeling, it's not like, there is a specific Elliott channeling technique, and what you do is you connect the highs of waves 1 and 3, and you extend that parallel off the low of wave 2. This is going to blow your mind because it looks like it's completely silly because it cuts through all this price action, but then you see that it actually hits the low tick of wave 4. Just now, that was last week. Okay. So it's possible that actually is a really, really, really big low. Okay, and you can actually, and also the market would subdivide into roughly 2 equal legs, right? A, B, C, 29.65. Closing low is actually 29.75. And within wave C, you've got 1, 2, 3, 4, 5. So does that mean that the dollar CAD is going to 150? It's possible, but keep in mind that this could take a while. If this is a fourth wave, you could actually end up with a triangle. Okay, so you could trade like in a range between basically, 143, 142 or something, and here for a while. It's still good for us on the upside in the near term, obviously. And you could also have what's called a truncated fifth wave, right? Meaning that you actually get a 1, 2, 3, 4, 5, but the market never actually registers a new price high. Okay. So I hope this makes sense. The bottom line is that we have come into support and we at least were able to get on the long side of it. But yeah, the Elliott channeling is interesting to know just because it does suggest that we could go much higher. Yeah, Leon, that is quite possible. I see what you're saying, my friend. Absolutely, it is. Yeah, so Leon, by the way, is saying, is this seems reasonable with the technicals? Or, next week higher stock market yen crosses sideways lower in euro and pound. Then as we go into April, reverse and higher, lower in yen crosses. Yes, it does seem to make sense. In fact, Leon, let's go real quickly. Let's see. So this was dollar CAD. I want to look at crude oil because, and again, this was in the post the other night, but we were able to kind of identify really good resistance in crude. And on that dollar CAD chart I just showed you with the possibility of us actually having the fourth wave low in place, that makes this possible too, right? And this is ABC. And again, if you want a little more color on this, because it is getting fairly long here, the webinar, but check out the post from the other night. I think it was on Sunday, so I think that was the 20th, okay? This scenario is quite possible for crude, okay, in which this rally is actually just a short covering rally as a fourth wave, and that we're actually going to head lower, okay, to new lows before the huge low is in place, okay. And if you think about the so-called fundamentals of the situation, you could have this happen as the bankruptcies and everything take hold for the oil companies, because that needs to happen. So you probably need to get crude to come off again before you can have a really big, significant, major low in place. So we'll see. Near term, again, we actually had a really short-term support now, about $40. Posted a short-term chart on Twitter earlier. And the big level, as far as I'm concerned, is probably the lower pair low, which is basically in line with the low from, I guess, last week at 37.42. And that's, over the next few days. So this situation in which we'd be looking for a new low in a wave 5, from a trading standpoint, we kind of took advantage of something already with a long dollar CAD at a good price. But looking at this, if we break below 37.42, it's kind of like, reinforces this as the favorable idea, if you will. Again, do you think we have bottomed dollar yen or can go below 110? Well, so with dollar yen, I would not be surprised to see us. I think we have a low in for a little bit. Like, again, we could trade off into. I'd be looking down from basically near here, but down to like 11.70. 111.70 is that intervention level. That's what I think it is. Looking towards that level, and then from there, I'd look higher as markets rip into their new highs. But you could see a decent sized rally on dollar yen at that point, and then from there, we'll go from there. But as a trade, near term, next couple moves, looking lower, dollar yen 11.70, looking higher from that point on. Okay, higher from that point, so higher from 11.70. Okay, dollar yen seasonals peak out really kind of towards the end of this month too. So. I think the big clarity probably occurs as we get into April. All right. Dollar CAD again, quickly. The slope that we're really following here is actually is just the highs from here, okay, from 211 and 224. Okay, so, if you go on a intraday chart, those levels, okay, this was basically what we used, right, to get long, because support, we broke through it, behavior change actually held on the way down, actually held this morning. So, we're kind of you're getting into the initial resistance at this point for dollar CAD. In fact, it's right. It's about 132.40, right? That's 2 equal legs from the low, and we're currently 132. So I would be wary of, if you're a shorter term trader here, getting into 132.40 3240, 3260. You've also got the former low down there, 32, 3260. You could actually end up getting some resistance up around here in order to, keep a positive bias on it. Pretty simple. Probably just want to use this trend line, as support. You want to hold above this, kind of stay bullish. You can see if you go to a 60-minute chart, go on that 60-minute chart. Okay, this line might actually be, you can see here, this crosses some good short-term pivots here. Okay, actually resistance during Asia last night. So that could be a level to watch for support, this line right here itself. So if you get up 3260s, support would be looking for basically, resistance, looking for support down here about 130, 140, which was the spike high from yesterday during Europe. Is that there were a lot of spike highs, of course, as the Brussels, tragedy came to light. Okay. So those are your near-term trading levels. But again, I do think there's potential for some good upside surprise in dollar CAD as we get, as we get, down into the rest of the week, really, because we'll see how crude wants to trade around the support and everything. But okay. All right, so we've got that. Already getting actually decent responses here in Aussie and Kiwi off of their supports. So see how Asia wants to do tonight. But I think you could get, if you go 15-minute here, I think that you could get a little lower. Again, we had the support for Aussie basically just right under the low, where we were 75.22, had like 75.18 was the measurement, right? Two equal legs. So if you look at kind of the way the market's traded down here, you can envision like a small little kind of fourth wave, like up here, this being that rally, and then a little fifth wave drop down into below the U.S. session low, and then finding a low during Asia. So that might be worth putting in an entry tonight, and I may very well do that. We'll see. And finally, I do want to look at a few excuse me, a few crosses I had, non-dollar crosses. So some of we already kind of looked at pound yen, you know all about that. But here's some of the really interesting non-dollar crosses to look at. And this is obviously with talking about the S&P and, et cetera, coming into some sort of a peak. So here's CAD yen. If dollar yen wants to pop off a little bit, then check it out. We've got the year open at 86.99, which was literally high tick as well, almost back in February. We're coming back into that level, and there's more there. You got the trend line here from June 2015, December 2015, and it's really right in line with it. It looks like it's right in line with it on the 28th, 29th, so that would put you basically Monday or Tuesday. And then you've got just a simple line that extends off of really big lows, October 2014, January 2015, sliced through it on the crash back in August, but then it was support again, and it was support again before the breakdown. So there is a really, really big area of resistance up for CAD yen, really about 87, basically 87. I mean, you could call it 87.25 if you want, but huge area for CAD yen. And that could really be a trade, up into that level and then short for that, to, basically for long-term resumption, on the downside, or potentially into this trend line support, which goes back to 2009. So you're talking 87, down to 78.50, 78.60 or so. Okay. Yeah, this is the weekly chart, but okay, so basically here, here. And then Aussie Yen as well is a very interesting chart. Same idea, not surprisingly. Similar trend line. This one's actually a little longer term. Goes back to 2014. Basically goes off all the highs from 2014, or since the downtrend, I should say. 2014, the high, November 2014. Highs throughout. May 2015, June 2015. High here, and obviously last December. And then it's up pretty close to its year open price as well, which is 87.40. So that's another big spot. Okay. And then as far as the downside's concerned for this one, not as clean as CAD Yen because you don't have that trend line, but would be basically following this channel. I mean, even caught the lows. So yeah, a couple very interesting crosses, CAD Yen and Aussie Yen, could be coming into some very important levels for resistance over the next week and even sooner, maybe the next 3 to 4 trading days. And I do think a lot of that's going to be yen based, just based on my interpretation of what's going on with the 111.70 region being the Bank of Japan level, Ministry of Finance, and et cetera, et cetera. If you get down there and then they're going to rip that thing again and they could get up, 113s, 114 just within a range, that would send those crosses back up into those levels. Okay. All right. So that's it. That's all the good stuff I've got for right now. Again, getting some pretty clean price action on some of the individual pairs, obviously, as it pertains to the general dollar theme, there are, I'm sure, plenty of folks just scratching their heads like, what the hell? The Fed said they're going to do this and they're supposed to kill the dollar. Luckily for us, we're not really chasing stuff, and we're kind of trying to outline where the big levels and the setups are. And yes, I realize that we're long euro now, but keep in mind we didn't buy it when it was up at 113 either. So yeah. Anywho, oh, Gary, sorry man, what's up? Dollar Mex, how could I forget? All right, I might have to do some work on this right now because this chart goes pretty far back. Well, let's see here. Can tell you right now, actually, that I haven't looked at this chart in a very long time. Let's look at a few things here. Okay, so you're going to see me go through this without just basically kind of naked at this point because I haven't really looked at it in a long time. First things first. Okay. Let's look at this really long-term channel. Okay, that's interesting. Let's see where you, so there's the, basically it looks like that's the midpoint for this. We've already come into support. You can just see from former resistance. You also have the year open down here, I believe. Yes, you do. It's right there at 1716.22. Actually, there's trendline support right there. I think that you probably get a bounce in dollar mex, continued bounce, and that would fit actually quite well, wouldn't it, with the idea that you're going to see crude oil et al, come off a little bit. You're going to see dollar CAD come off a little bit. So I could almost answer this question without even really necessarily looking at dollar mex. I'd be looking higher in dollar mex at this point. because we have come into a pretty long-term support from a number of things, including former range peaks, okay, former or trendline support, as well as the the year open price just below. So, again, this goes the importance of kind of looking at each chart. Again, you look at the dollar index and you're like, well, how can you be bullish dollar mex? Well, the dollar index, one, the major index, ICE index, like, has a very, very, very tiny amount of peso in it. And two, the US dollar index doesn't have any in it, right? So that's primarily Europe and majors, right? And you're looking at these minors and et cetera. You're not really, can't really take that into account. So I will tell you this, I do think that you have a top in place for a bit, and the coming consolidation is probably going to be something of a fourth wave. So you're going to be in a trading range. But from here, the answer is higher, in my opinion. And this could end up being actually resistance at some point. Let's see where a fib would come in on this. 1859 could be interesting. 1833 is interesting. It's 50%, but more interesting to me is the fact that it's the consolidation up here before you had a breakdown. So that's how I'd be looking at dollar mex right here. Okay. Hold on, let me just try something here real quick. There you go, that's interesting right there too. Okay, so Gary, do you see this? So sometimes going broad and not really screwing with the shorter term stuff is actually the best way to go. Several reasons. One, you're not pretending to see crap that's not there, and like you're not making it up as you go. It's there, okay? Like this was the 50 line, right? You're into the 50 lines. You can call them different things. You can call them the 50 lines, median line. You can call this 25, 50, 70, whatever. Point is, this was influential, and this was really the breakout through this line, okay? Well, guess what? The other line ended up being influential too. You had a lot of consolidation around it. Here we are right now. So that puts us at a pretty big spot for dollar mex, okay? And just, so you guys remember, another, you remember when we looked at gold, right? And this in the 50 line in action type of thing, right? Same thing happened here. This was what turned us really kind of bullish gold back a bit ago, right? We saw resistance on it became support, and it's actually a good time to look at this chart because guess where we are? It's the 50 line again. Okay, so you could bounce from here, just looking at this chart and nothing else. So, yeah, that's my take right there, Gary, on dollar peso, is that I think you can go higher from here. Okay. Levels to pay attention to. Again, the month open is nice, and I love those just because they're objective and you don't really have to think about it. But the better level might be up here, just because you have two things there. If you were to rally from here, and I think we do, then you have consolidation, from price highs, which is the most important thing. And again, you have the 50% level, right? Just a retracement, right? So that's what I'd look at, Gary. All right. Okay, cool. All right. So Gary, you are quite welcome. Everyone, thank you so much for attending. I want to get this, up in archives because we went through a lot of stuff as always, but we went through, a good amount of charts, and want to get that out. So if you were late attending or, or just want to go over it again, earlier in the webinar, we went through kind of euro, yen, stock markets in that order, tied them together. Then we kind of went through Aussie, Kiwi, pound, and then we went through CAD, crude, and then just now kind of went through some other stuff. So everyone have an awesome rest of the week, awesome weekend, And if you're Christian, happy Good Friday coming up, and happy Easter. And have a great time with your families and everything and your friends. And we'll be back obviously next week with another webinar, and be back with an update tonight and tomorrow, and all the other trading days. All right, so take care. Bye.